Hello everyone, this is Joshua Hayes at BigWaveTrading.com and BigWaveTrading.net coming to you with the stock market wrap up for June the 3rd. Let's start with the New York Stock Exchange. Let's expand our price charts all the way out. This is how I normally look at them, just so you know. Let's expand them all the way out. You can see that the New York Stock Exchange had a nasty pullback. However, intraday, it found support and had a nice rally off the lows. And that's why you can see the little tail right there. Also, notice the 6033 close is above the 6004 open on the confirmation of the breakout day. But bottom line is, as long as it can hold the lows that are right here, the opening of that day, whenever it broke out, this is a good stock. So the 200-day moving average is going to be the key support area for this one. Let me get rid of all the lines so I can just see the chart better. So right now, as what I could do here is connect this line with here. That was the breakout line, remember? And if you can look, actually let's go on to arithmetic because it's more clear. That's where the moving average can find, or that's where the stock can probably find support, is right there, right on that trend line that it was able to break out of. Going to the S&P 500, the brother of the NYSE, you can see that it also was down. However, it was down only 1.37%. Not only that, the tail was even bigger. And volume, just like the NYSE, was lower. So overall, it's a good pullback. To me, you can do a couple things here also. Remember that downtrend that I showed you on as the trend line that it broke out above? Well, let me go and get rid of that since it wouldn't draw it straight. Let me go back to what I have to use. And let's just connect the old highs back here in May. And let's use that as the pivot point to where the support is. If you can see that, you can see that the stock then broke out. We got to do the trend line that connected those highs down through those highs. So we got the breakout early. But if you waited for the breakout above the full cut base, you got it. And once you got it, you can see here that the pivot point is what that is. It's called a pivot point, is holding. So the S&P 500 is fine. Volume's lower, only down 1.37% today. Very well. The NASDAQ, let me go to the arithmetic chart on this so I can just look at the 50-day moving average, because the 200-day moving average for the NASDAQ, as you can see here, it's above both. The 200-day moving average is now almost near the 50-day moving average. They're about ready to kiss each other, become best friends. But to me, it needs to kiss each other. Then the 50 needs to go above the 200-day moving average. Price, as it pulls back, needs to find support around there and it'd be good. Also, if you want to use the breakout highs back here in May, you can see that after the stock broke out, rallied higher, followed through, pulled back on lower volume, only down 0.59%, outperforming the S&P 500. So the NASDAQ's relative strength line is going to try for another breakout to a new high. And also look closely. Volumes below average and lower than the day before. But the NASDAQ's tail is so much more bullish as it opened at 1825, closed at 1825, and it was actually, as you can see here, 32 cents higher. And then the open to the close. Let's see on Zoom 9 if you can even see it open. Nope, can't. Too tight, but overall beautiful, as you can tell. Just a beautiful, 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 beautiful chart pattern in the NASDAQ. And the one good news about this rally is that recently the IBD 100, as we're looking at here, you can see it was down today, not quite down a full 1%. And overall, since it wasn't down a full 1%, and the S&P 500, which is what this relative strength line is, was down, I think, what was it, 1.3%? Let me go look on this other one, other computer. Yeah, 1.37%. Since it was down 1.4%, and the IBD 100 isn't, that means another positive day of divergence. So the relative strength line is now making higher lows and higher highs. You have 3 series of higher highs now, and 2 series of higher lows, but the higher lows is over a much longer period of time, so it's okay. So the IBD 100 outperformed. Did the IBD 85 outperform? No, it did not. It was down 3.1%. It was down over 1%, and it was down actually a little bit around like 1.5%, beating the S&P 500's down day. However, as you can see down here, volume is below the 50-day volume average, but I do believe it was slightly higher. Volume 3.2, 3.299, 3.286 the day before. But the IBD 100 still is the index that you've heard me say in past videos that I like better. Look at the recent action in IBD 85 and compare it to the 100. The 100 is more tight, more solid, and on a weekly you can see how tight that is. Look at the range. You can draw a trend line connecting those lows, draw another trend line connecting those highs, and you have a wedging ascending channel. Overall bullish, but until the 50-day weekly gets above the 200-day weekly on that one, this pattern won't be that bullish. Plus, you can see that volume on this uptrend is lower than the distribution that we had right before that. So it's not extremely bullish, but for right now it is more bullish, and that's good to have positive divergence. Now let's look at the semiconductor index. I'm going to show you the SOX, and you can see it was down 2.21% today, but look at the tail, very good. Now the S&P 600, which is very important to follow. Look at it. It's bullish tail. Look at that. Excellent move reversal. Opened at 275.86 yesterday. Closed at 276.05. So, excuse me, closed about 20 cents higher than the open of yesterday. So it's still up for me overall. And it's just a very, very nice looking chart. And look at the, I want to show you. Look at the relative strength line. Also, look at just like the NASDAQ. Excuse me. Trying to get back to the old highs. There's S&P 400 now. You can see down only 1.64%. Another big tail overall. But it's quite obvious to see the NASDAQ is the winner out of all these. And then the super winner out of all of these is, of course, the IBD 100, which was even better, I guess. Well, no. It wasn't better than the S&P 500, but it wasn't better than the NASDAQ, but it was better than the S&P 500. Last, I want to show you Platinum had a pretty nasty day, reversal. Keep an eye on that. However, I want you also to remember, on a very short term, this is what kind of action you got. So, overall, it wasn't that bad. It was kind of an inside day overall. Let's expand that out. And then let's look at silver. Silver, that's a pretty bearish tail to print. However, I don't know what the volume is, but if it can hold above this line right here, which is clearly the pivot point area, so it's very key for it to do so, the stock will be okay. But we'll see how it decides to act. I mean, just don't know. It's a pretty ugly bar. But the only thing I have good going for me is that the NASDAQ looked really bullish. So either that means inflation was helping the rally before, because you can see the NASDAQ here, and look at it with silver from March to June, or now inflation is no longer taking over, and now we have real growth. I'm not sure. We'll find out later on. Gold, it could be just forming a handle. Remember the beautiful cup it was making? Still is making the beautiful cup. Maybe it's just ready to form a handle. And just a nasty start, and then just gets nice and smooth, drifts down, and then breaks out. Who knows? Bottom line, still looks good to me. Still have a very bullish reverse head and shoulder pattern. Have a cup pattern it wants to break out of after this last one it did down here. As you can see, connecting those recent lines. You see it broke out hard too. It's probably easier to see on this arithmetic actually. Oh, those trend lines aren't. Oh, they're there. Yeah. So there's the breakout. So as you can see, everything is bullish. Commodities look like they want to take a rest. Let's look at this commodity DBC. Volume is lower than the day before, still above average, still has green bot, but lost it from being almost max green. If it bases out again and moves higher, that's fine. But if it continues to sell off and our market starts to rally, that means that inflation is not causing our market to rally, and we're rallying based on possibly a real bottom in the economy, which seems almost impossible to happen with socialist policies. But I just pay attention to the stocks, and as long as stocks are doing what DDRX is doing, it only gaps and breaks out here and is only up 275% from there. Oh, but wait, let's say that you got it from right here, this initial huge move. You're only up 1,172%. Oh, let's say that you just happen to have a fortune, telling crystal ball, and you knew that this was the bottom in March, and you knew to buy there. Oh, you only made a 5,000% gain in 3 months. Not bad. But that's kind of gains you can get in this market, so I'm going to continue to focus on the long side. Anyway, I'm going to wrap it up now. I'll be back with part 2 for subscribers. We only have 1 new long, wow, and we only have so far 4 new speculative longs for the Platinum members, and that's a lot lower than the 20 plus we've had for the past 3 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Yeah, 3 days and almost 20 for 4 days. And that's it. I'll be back with part 2 for subscribers, and I'll update the rest of the site as we go along. Aloha. Have a great, great, great Thursday.